Hey, good morning. Welcome to the mortgage rate forecast with Criss. Here's your mortgage rates and news for November 30th. If we take a look at the charts, we're currently trading about 102.61. Support's coming down below us. I don't really like these indicators right here. Our true support's really more like 102.40 and 102.20. Our resistance is right above us at about 102.80. And look at this, guys. We have been just flirting with 102.80 for quite some time. We broke through it earlier this week. Our clients that were still floating, we actually had them lock in. Great timing. You know who you are. Since then, bonds have sold off. And now we're still coming against that 103 resistance, and we did break past it here in early mid-November, but not for long, guys, not for long. So here's where we're at. Reports came out, PCE prices. This is actually kind of an inflationary factor. The Fed looks at this to figure out if they're going to increase the short-term rate. Remember, the Fed's target is 2%, and this is only coming in at 1.6. So the economy is still not doing as well as the Fed would like. Which kind of brings up interesting topic, which is technology. Technology has really increased efficiency so much that that actually has a lot to do with inflation. So we're kind of in an interesting time. Jobless claims came out, really not a market mover. Neither was personal spending. Chicago PMI and the personal income. Those two technicals actually did drive bonds down a little bit this morning. But I think the big news is, and you probably saw this on the news today, stocks broke 24. I mean, this is a record-breaking day for stocks, so good for stocks. Anyway, to kind of quantify where we're at, Freddie Mac reported the average consumer paid half a point to get a 3.9 rate back here last month of October. So to kind of quantify that, if the average bond price was about 102.9 and we're trading about a 102.61, that's 29 cents difference. So that means if the average consumer is paying half a point, one may assume that the average consumer may be paying closer to a full point to get that 3.9. So as far as my last projection goes, it was a hit, but barely. I was projecting 102.60 as our low, and guess what? We're at 102.61 today. So barely, but I did get the hit. As far as the analyst outlook, all the different analysts that I track, it's overall very bearish. So they don't think the bonds are really going to jump out of this, break 103. I think their bias is more toward the bonds actually continuing to sell off. So if you are floating right now, if you're in a mortgage, getting a mortgage, and you haven't locked in yet, it's pretty consistent. I think most of the people are actually just playing it safe and actually locking in, just because the downward trading channel that we've developed over the last few days just doesn't really look too healthy for bonds. And so if you are floating right now, I think you are going to be at risk to maybe in seeing increased fees, points, that kind of thing, if you do float. So hey, but nobody has a crystal ball, but that's what the general consensus is. We are in the middle of my projected trading pattern, which is going to be about 102.40 to 102.80. But like I said, I think the analysts would agree with me. They're more biased to saying, hey, bonds are probably going to get worse before they get better. So if you are floating, maybe consider locking. Anyway, that's it for now. We'd love to hear your comments. Leave those comments down below. And I'm sorry, I got to say it. Everything likes to be liked. So does this video. You got to hit that thumbs up button, right? And if you would like to subscribe, top left, and Mortgage Bonds 101 at the top right. So if these charts and what I said just didn't really make a lot of sense to you, it's okay. Click on the Mortgage Bonds 101 video, and that will teach you all the basics that you need to know as a consumer when you're trying to lock in the best time and the best rate. Anyway, that's it for now, guys. Have a great weekend, and we'll talk to you soon.